I'm Russell Clark, and this is VixShield's Morning Outlook, where it isn't news till we talk about it. Good morning, tribe. We're sitting at the exact midpoint of the week. Monday gave us quiet confidence. Tuesday delivered another clean place day, with the VIX sliding lower. And now Wednesday stands in front of us like the scoreboard at halftime. The question isn't whether the market will move. The question is whether we stay disciplined while everyone else starts guessing what the Fed might whisper this afternoon. You know what the big money did while you were sleeping? They kept the overnight futures in a narrow band. No wild swings out of Asia. Europe opened with the same polite drift we saw at yesterday's close. The 10-year yield barely budged. The dollar added just a touch of strength. And the fear index, it kept sliding. That's the story behind the curtain. While retail traders were reading headlines about potential Fed drama, the institutions were quietly positioning for another day of contained range trading. They understand something the screaming boxes on television refuse to admit. When the VIX drifts this steadily lower, the path of least resistance usually stays sideways until the headline event actually hits. Last night's action from overseas told us volumes were light. No big repositioning in currency markets. Gold gave back a little more ground. Even Bitcoin and the crypto complex stayed relatively subdued. The big boys weren't rushing for the exits. They weren't piling into hedges either. They were doing exactly what we've been training ourselves to do. They waited, which brings me to the scoreboard. 2 days into this week, our approach has been rewarded twice with clean place signals. The VIX has now dropped below 19 for the first time in several sessions. That compression isn't random, it's the market telling us that realized volatility remains exceptionally low. The 10-day historical volatility sits comfortably under 11%. That's not noise, that's a signal. And here's where it gets interesting. The term structure remains in healthy contango. That spread between the front month and the 3-month expectation sits wide enough to remind us that the market still expects volatility to stay contained in the near term. Contango is our quiet friend. It means the futures are pricing in calm, which gives our methodology extra room to operate. Remember what we talked about on Monday? When all three gates line up. VIX trending lower, expected daily range sitting at 0, and contango holding firm. The math starts to favor premium collection in a serious way. Well, those gates are still open this morning. Now let's talk about what the big media is feeding you. Turn on any financial channel right now and you'll hear the same drumbeat. Will the Fed break the rally? Is this the moment the whole thing cracks? They roll out the same 3 guests with opposing opinions and pretend it's analysis. They know fear sells. They know uncertainty keeps eyeballs glued to the screen. But you and I both know the real game being played here. The reality is far simpler than their panic theater suggests. The Fed meeting starts today, yes. The press conference comes tomorrow. But the market has been pricing this in for weeks. Realized volatility at these levels doesn't lie. When the fear gauge sits this calmly ahead of a widely telegraphed policy meeting, it's usually because the path is already mostly baked in. The institutions aren't waiting for a surprise. They're waiting for confirmation. And that's exactly why our community operates differently. We don't trade the headlines. We trade the mathematical setup those headlines create. The big money wants retail to panic, to chase, to second-guess their process right before the calmest part of the move. We've seen this movie before. Last Thursday, we warned you that low conviction digestion often precedes these events. Well, here we are. The digestion continues. Step back for a moment and look at the broader geopolitical landscape. Iran tensions haven't disappeared, but they've moved to the back burner. Trade negotiations remain in that delicate dance we've watched for months. The dollar's slight firmness this morning reflects some positioning ahead of the Fed statement, but nothing dramatic. Gold's retreat tells us safe haven demand isn't exactly surging. Even oil's recent pop hasn't spilled over into broader risk-off behavior. This is the environment where our Iron Condors truly shine. They were built for days exactly like this, when volatility expectations are contracting, when the daily range forecast sits near zero, when the term structure gives us that gentle tailwind of contango. That's when the probability tilts in our favor, not because we guess direction, but because we respect the range the market is actually offering us. VIX at 18.1, elevated but still below 20. Conservative tier is green. Safe to place. Balanced is yellow. Tradable, but sized down if you are cautious. Aggressive is yellow. Tradable with extra caution. That's the RSAI verified picture this morning. Our rapid skew AI engine has run the numbers, checked the live skew, measured the overnight flows, and once again delivered a clear place verdict. All entry gates passed. The math is speaking loudly. Now it's up to each of us to listen according to our own risk tolerance. This is why you are here. This is why we built this community. Because you can't talk about this stuff at the dinner table. Your family doesn't understand why we're excited about another low volatility setup. Your coworkers think we're crazy for not trying to pick the exact top or bottom. But we know better. We know that consistent premium collection in these contained environments is what compounds over time. We know that discipline beats conviction almost every single day of the week. Remember what we said yesterday in the close? When the gates align, the verdict is mathematically favored. Size appropriately. Let probability, not hope, drive the outcome. Well, those same conditions carried forward into this morning. The VIX kept its downward bias. The expected daily range remains suppressed. Contango continues to support the setup. Nothing has changed the core thesis, and that's the beauty of what we've created together. We don't need to be heroes. We don't need to call the feds every move. We simply need to show up, respect the signals, and execute the process that has been battle-tested through years of different regimes. Some days feel urgent. Today feels measured. That's the Wednesday rhythm. Midweek checkpoint. Halfway through the week, let's make sure we're still on plan. Here's what we're watching as the day unfolds. First, any early pressure on the VIX. If it tries to climb back above 19, that changes the intraday math. We'll be listening for any shift in that trend. Second, how the bond market behaves ahead of the afternoon announcements. The 10-year yield has been our quiet co-pilot all week. Any sudden move there usually telegraphs what the street really expects. Third, and maybe most important, the actual price action in the S&P itself. We've been grinding higher in these low conviction sessions. Does that continue? Or does the market start to tighten up as we get closer to the Fed statement? Our Iron Condors are built to handle both. That's the point. We don't need a massive directional bet. We need the index to respect the probable range, and be sure to listen for any breaking news from Miss Vicky. She'll cut through the noise the moment something actually moves the needle. You know what separates our tribe from everyone else chasing the latest hot take? We understand that these setups are earned. We didn't wake up hoping for a place day. The data delivered it. The gates opened. The RSA engine confirmed it. Now we simply execute with the same calm confidence we've shown all week. The big media wants you nervous. They want you clicking, refreshing, second-guessing. We want you prepared. We want you protected. We want you positioned to collect premium when the market offers it and to stand aside when it doesn't. That's the VixShield difference. That's the edge we've built together. This is the midpoint of the week, traders. The first 2 days have been textbook. Let's make sure day 3 stays that way. Trade the process. Trust the methodology. Keep your size matched to your tolerance. And above all, remember why we do this. Not for the adrenaline, not for the bragging rights, for the steady, disciplined compounding that comes from doing the boring thing correctly day after day. The Fed will speak when it's ready. The market will react when it reacts. But our job remains the same. Identify the setup. Respect the probability. Protect the capital. Everything else is just noise. These signals and insights are for educational purposes only and are not financial advice. Past performance is not indicative of future results. This is VixShield, your daily protection against market uncertainty.